Are you aware that in 2023, lottery winners paid millions in taxes? But how much exactly? The answer might surprise you. In this video, we help you understand the tax implications of a lottery win. Let's get started. And don't forget, if you find this video informative, please like, share, and subscribe for more financial insights. Lottery winnings are considered taxable income by the Internal Revenue Service, IRS, and are taxed at the federal level as well as possibly at the state and local levels, depending on where the winner lives. When you hit the jackpot in the lottery, there's an immediate tax step that happens before you even get your hands on the prize. It's known as the immediate tax withholding. The IRS steps in and takes a bite out of your winnings. They withhold 24% right off the top for federal taxes. This is like a down payment on the tax bill you'll owe for your big win. However, if your total tax rate is higher, you may owe additional taxes when you file your return. But wait, there's more. Depending on where you live, your state might want a piece of the pie too. Some states have their own taxes on lottery winnings. These can vary a lot from place to place. In some states, you might pay a hefty extra tax, while in others, you might not owe anything extra at all. And in a few places, they don't have a state income tax, so lottery winners there get a bit of a break. Local taxes can also come into play. Some cities or counties might have their own tax rules for lottery winnings. This means you might have to slice off another piece of your prize for your local government. It's a lot to think about, and it all happens before you even start dreaming about what to do with your winnings. This way, you won't be caught off guard by how much of your windfall goes to Uncle Sam and potentially your state and local governments. In 2024, the federal tax brackets in the U.S. are structured so that as your income increases, the rate at which it's taxed also goes up. These brackets are set to ensure that higher earners pay a larger percentage of their income in taxes. Here's a simplified overview. Lowest bracket. For the lowest income earners, the tax rate is the smallest. This is where most people start. Middle brackets. As income rises, it moves into higher brackets, each with a slightly higher tax rate. Top bracket. The highest earners fall into the top bracket with the highest tax rate. Let's illustrate with an example. Suppose you earn $40,000 annually, placing you in one of the lower brackets. If you win $1 million in the lottery, this gets added to your annual income, skyrocketing it to $1,040,000. This sudden increase shifts you into a much higher tax bracket, meaning a larger part of your total income, including the winnings, will be taxed at this higher rate. So, the more you earn, including lottery winnings, the higher the percentage of your income you'll pay in taxes. This is a crucial point for lottery winners to understand, as it significantly affects the net amount they receive from their winnings. How does the state tax lottery earnings? When it comes to state taxation on lottery winnings, the rules can differ significantly depending on where you live. Varied state tax rates. Each state has its own approach to taxing lottery winnings. While some states tax these winnings heavily, others are more lenient or don't tax them at all. States with high taxes. States like New York and California are known for having some of the highest taxes on lottery winnings. If you win the lottery in these states, a substantial part of your winnings could go towards state taxes. States with no income tax. On the other hand, there are states like Florida, Texas, and Washington that do not have a state income tax. This means that if you win the lottery in these states, you wouldn't have to pay any state tax on your winnings, which can significantly increase the amount you take home. State-by-state differences. It's important to be aware of your state's specific tax regulations because they can greatly affect your net winnings. The rate at which your lottery winnings are taxed can vary, so understanding these differences is key to estimating how much money you will actually receive. It's always a good idea to consult a tax expert or financial advisor in your state for detailed advice and to understand how your state's tax laws will apply to your lottery winnings. Did you know that there are options for receiving winnings, which means you can receive either as a lump sum or as an annuity? When lottery winners receive their winnings, they usually have two options: taking a lump sum or choosing an annuity. Each option has different impacts on tax liabilities. What does lump sum mean? Choosing a lump sum means you get all your winnings at once. However, this could also mean a hefty tax bill. Since the entire amount is considered income for that year, it could push you into a higher tax bracket, increasing the amount of taxes you owe. What does annuity mean in context to lottery earnings? An annuity spreads the payments over a period, typically 20, 30 years. This option can be more tax efficient as it keeps your annual income lower compared to a lump sum. You might stay in a lower tax bracket each year, potentially reducing the total amount of taxes you pay over time. There are certain strategies to minimize tax burden for lottery winners. Lottery winners can use several strategies to minimize their tax burden, such as 1. Receive earnings in installment payments. Opting for annuity payments, getting the winnings in installments over several years, instead of a lump sum, can keep annual income lower, potentially reducing the amount of tax paid each year. 2. Make charitable donations. Donating a portion of the winnings to charity can qualify for charitable tax deductions, reducing taxable income. 3. Invest in tax-efficient vehicles. Investing in retirement accounts or other tax-deferred options can help in managing the tax implications. 4. Set up the right legal entities. Setting up legal entities like trusts might provide tax advantages. 5. Professional advice. Consulting with tax professionals can help in finding the best strategies tailored to individual circumstances and maximize tax savings. Each of these strategies has its own set of rules and implications, so it's important to get professional advice before making decisions. Thanks for watching our video on how much do lottery winners pay in taxes. We hope you found it informative and helpful. If you did, please hit the like button and subscribe to our channel for more financial insights. Don't forget to share this video with your friends and leave your thoughts or questions in the comments below. We love hearing from you, and your input helps us create content that matters to you. Until next time, keep managing your finances smartly.